Speaking of different types of markets that we can jump into, CalShi. I don't know if you've been seeing this, but they've started advertising basically everywhere. I don't know if it's just because I started noticing them or because they started advertising, but 3 weeks ago, there's a regulatory change that allowed them to have U.S. elections in their betting markets. Actually, let me play the video real quick, and we'll talk about it on the backside here.
Prediction market startup CalShi resuming some of the betting on its platform related to elections. This follows a decision by federal appeals court on Wednesday. The court's ruling effectively lifted what was a freeze on congressional control contracts, which were prohibited by the CFTC. Joining us right now in an exclusive interview to discuss it all, CalShi CEO Tarek Mansour. Good morning to you.
It was now the first time in 100 years that election markets were legal in the United States again. Today at 8:15, we are going to see the first legal trade on the U.S. election in 100 years in the United States.
Of course, one of the big things that people worry about when they hear about gambling or betting on the election is the manipulation, effectively, of this market to try to manipulate the impression that the public could very well have about the outcome of an election. What do you think about that?
So I'll start with the sort of headline answer. These concerns are totally moot. They are baseless and ill-founded. And there's three reasons for it. These markets have existed. They've existed in a number of other democracies, UK, Ireland, Australia. They've existed actually in the US. I think, Joe, you've mentioned these markets multiple times on the show. And the reason is because they're accurate. They work. They work better than polls. The polling accuracy has been decreasing over the last 10 years. So first is they have existed, and if anything, they haven't threatened elections. They've actually promoted. Now that you have a source of truth that you can quote. And three, let's actually get into the
Why do you say they promote election integrity?
Because they're a mechanism for truth.
Meaning what? Meaning that people look at that as opposed to polls, and that's helpful?
Well, they look at that in conjunction to polls and in conjunction to a lot of other things, right? Like in the 2016 elections, you had a number of polls that were saying Hillary Clinton had a 90% chance of winning, which was a ludicrous statement in retrospect. These markets were not going to be at 90%. They might have been at 55%, but not 90%. And so these markets, people have skin in the game, so they don't lie, whereas in polls, they can say whatever. And two, markets work. I mean, if you believe in markets, you have to believe that these work. They aggregate the wisdom of the crowds, and you get an accurate gauge and so on. I do want to respond to your specific... You outlined a very specific example, and I kind of really like that example. It's like, well, what if a group of people, aggregates? It's like, let's manipulate the odds of these markets.
Yep.
Sure. Let's assume they decide to spend, tens of millions of dollars, hundreds of millions of dollars to move the prices. Fine. They can do that. But what will happen is the price moves from 50 to 60. Arbitrageurs and traders on Wall Street will see that the prices have moved, bring it back down.
How much money would it cost to move it? You say hundreds of millions of dollars. If somebody bet, I don't know, 100,000, would it move it? How liquid are these markets? How much would it take? How much?
There'll be a few $1 million of liquidity at the top of the book. I mean, you have to spend millions to move it. But the thing is, like any other market, if the fair value is 50 and you try to move it to 60, traders will bring it back to 50 immediately.
One of the things we have seen, though, over the past couple of years, and it happened in the context of short interest on GameStop, for example, or an AMC, where you've seen, call it the wisdom of crowds. I don't know if it's the wisdom of anything, but it's a group of people, maybe who aren't calling each other on the telephone and doing this secretly, but are doing it on Reddit or on Twitter or you name the social media platform, and they're deciding we're going all in this way. And they have moved the market not just for a day or two or three, but for months on end, sometimes in what you may describe as a rational way, what other people would say is completely irrational.
Yeah.
What would happen if that were to take place, and would that be perverting democracy?
That's a great question. There's something kind of interesting about these markets. They're not as manipulable as stocks. It might be a bold statement, but there is a correct answer here. What is the price of GameStop? Can anyone here tell me? I don't really know.
I could give you a quote.
What is the probability of Trump winning this election? Somewhere between 45 and 55. It's probably not 90. And so there's an existence of what we call a fair value, a correct answer to this price. So these markets are not actually very manipulable.
So, Mike, I am just so fascinated by these betting markets and how they're becoming more and more popular, because just imagine, just a thought experiment of imagine it's the stock market doesn't exist, or it's back when the stock market was first starting, and we had this sort of media, and there was sports betting, right? Sports betting has been around for forever, and the discussion is, hey, how can we actually have these stocks trading on a market? Well, couldn't they be manipulated and change public opinion about what people think about investing and couldn't that be dangerous? And what kind of regulatory changes? You can imagine having that conversation around the start of the stock market. And now the idea of not using this as a tool, as a barometer for the health of an economy, as a way of generating liquidity, as a way of expressing positions, ideas about the future. Like we see that as like, oh, of course, this is a useful tool, especially in the capitalist society. Well, the betting markets, we're starting to get this thing now, right? So to the point where on CNBC, I mean, we're getting that Venn diagram meeting where the betting market is meeting the people talking about the stock market. So literally, you can bet on Taylor Swift on one product talked about on CNBC now, and then you can bet on a stock for Kathy Woods for ARK Invest ETF. I find this just to be this eclipse happening to be absolutely mesmerizing. Do you have any opinion on that?
I do. I have a few opinions on this. One is that I don't think that this is an accurate reflection of the probabilities of the outcome of the election. And I'm going to stand on that despite the claims made by the gentleman that was speaking there. I'm not actually sure who they were speaking to. Who were they interviewing?
He's the CEO of CalShi.
Of CalShi. Okay, that's what I thought. So obviously he's got a bit of an incentive to promote this idea that they represent accurate views of the market because he wants more participants on the platform. So I'll go ahead and outright say like his incentive is to get more people participating there and expressing their vote. And from that perspective, I would love to see more participants in these markets, but we have to be honest, these are both young. They have specific types of participants. And I guarantee if we polled the United States, 90% of US citizens have not ever used any kind of betting pool to vote on an election before, right? So if that's the case, then we've got this isolated sort of cohort of individuals in the United States that we're using as a sample to represent the rest of the country. And I don't think it's a representative sample. I think that there's definitely some inherent bias there. There's definitely some individuals that are more likely to vote for one candidate or the other that would actually show up on platforms like these. And it definitely doesn't represent the overall voter pool across the United States in all states and all counties. I think it's too small of a sample size. In addition to that, I don't agree with his viewpoint that these markets can't be easily manipulated. I think we discussed that last week, that it's even been discovered there's some pretty large pools that are working together to manipulate the percentages on Polymarket.
That's right.
But here's my thought behind this. When we first started talking about this, we talked about it like it's a futures contract. If it's like a futures contract, then I have the ability to get into this position, vote for one candidate or the other, it doesn't matter. And I can sell that position again if I've increased my position in profit. So that means the turnover on these trades is some degree higher than the amount of participants that are out there, right? Let's assume for a moment that people are actually trading in these contracts. That's going to create a signal of momentum within the two candidates that are on that list, or the two outcomes that are listed. If people are under the impression that if they vote for Trump and they likely will see an increase in value in the future, then what stops them from buying today, selling tomorrow in profit, buying again, selling again in profit? That increases the amount of volume that's there. But ultimately, the bigger point I'm trying to make here is that their incentive to vote one way or another likely has to do with the trend of what's showing up on the chart, right? If everybody is jumping in on the momentum of the winning candidate, whoever that is that necessarily representative of our sentiment about who the candidate should be? Or is it because there's an incentive for you to get in on the winning candidate?
This is what I love about the betting markets, because what we definitely have, so what you just outlined are potential forces at play, motivations and forces at play. But what we definitely have is money on the line on a chart, right? So for whatever reason, the people are putting money into it, whether they think this is a way for me to actually vote with my money, or they are trading public opinion or posters or whatever it is, at different motivations, which is the argument for the stock market, right? That over time, what is it? Voting machine versus weighing machine. That short term is voting machine, long term weighing machine. Now, because these are betting markets that are short term, it's sort of like all voting machine, no waiting, right? So like that's basically the what I'm getting from what you're saying, that we're never actually going to get to the what the CEO was saying, the truth of it, right? If it's being manipulated, because there's no reason for it to resolve in that way. The people who are trying to bet in certain direction in order to influence public opinion, um, they're not looking for a profit at the end. Their profit is the change in public opinion. They're not looking to close this position out at a gain. They're fine with that being a loss. The people who are trading the pollster information or discrepancies with the pollster information, or doing arbitrage between one platform or another, they also don't care about the final outcome because they're in and out while it's happening. Fine, but that's for right now. Right? If we're seeing the trend of the popularity of these systems, what we're seeing is that they're going to become more and more popular and more accessible. So one of the issues with Polymarket is that they weren't allowed to U.S. residents, right? And so you're like, oh, okay, this is supposed to be representative of let's say the presidential election, supposed to be representative. Yeah, but no U.S. people are allowed to participate unless you use a VPN in order to do it. So what are you even talking about? Whereas CalShi is allowed for U.S. residents. So I'm wondering now if that might be a dynamic, and then if we have the numbers show up in CalShi in one way for the split, and then different in Polymarket, well, then people might be like, well, I'm going to trust the CalShi more because it's more U.S. residents. Let me short the Polymarket one, and then you have this sort of dynamic. And so I'm just interested in seeing how all that might actually play out, and then let's say the election the election occurs, we get a bet, and let's say it is in favor of who was winning on the betting markets. Well, that makes it more likely that people will bet in that will side with what it's saying in the next election season. And if it's not, well, then people will be like, I couldn't trust it. It'll change the dynamics, and we'll have a different thing. So I think over time we'll settle on something more even in the short term, more actually accurate. But the thing to keep in mind here is that we're obviously coming to the forefront because of the election. There are markets on CalShi that, I mean, no one's going in there to manipulate the those markets. Like, I just want to share my screen here for a second because I just find this absolutely
I would argue against that. I think that there's an interesting inefficiency in these markets, and as I look at especially the change in trend on Polymarket for Trump versus Harris, if we can pull that one up as well, there was an interesting arbitrage opportunity that was there at the early stages of that contract. Yeah, right there. If there's a big enough spread between, like, this to me looks like a spread trade, or a pairs trade rather, where the divergence between the two outcomes is so wide that you'll want to go long Harris and short Trump here until it gets closer to an efficient outcome, right? Or at least a more realistic outcome. And I think that it danced around right in the middle there because of arbitrageurs. And as time has gone on, they're starting to create this divergence between the two again, sure, because of the popularity of Trump being on the rise here, which again, I think plays into momentum. But eventually that spread will be so wide that arbitrageurs will step back in again, which again, as I'm trying to explain some of the behaviors of the market participants here, I think this represents more of an example of inefficient markets and arbitrage opportunity rather than a reflection of pure vote. To your point, though, as the population of users grows, that will start to diminish unless the size of the arbitrageurs is larger than the notional size of all of the people participating. If people are just throwing around $5 bets, for example, and arbitrageurs have hundreds of millions of dollars to work with, then they can actually sway the market.
Right. Well, over here we have right now CalShi is saying that the amount traded, the volume in this market is 76 million. And I believe there's a cap of 25,000 that you can actually place on the trade. So it's sort of one of those things that, hey, maybe the difficulty in which someone who wanted to deploy $50 million in order to move the market consistently over time for periods of months might be too much to make it worthwhile. I mean, that's a sizable amount of money. So I'm more inclined I'm more inclined to believe that it is possible that these numbers are more accurate. But or more that the bias, it's no matter how spread out the numbers are, it's the bias you want to go to. But the thing I'm really fascinated by is, well, these two things. One, the markets that are not likely to be manipulated. So, for example, weather
Do
patterns.
you really think that Kalshi would prevent hedge funds from operating as arbitrageurs in these markets to create more liquidity, though?
Well, I believe that was part of the issues that they were having with part of the issues they were having, that made it so that they couldn't do the election betting anymore.
Hmm.
So they lost the ability to do it. Then they had to deal with the CFTC. Then they have to sue the CFTC and come back. And so they're under scrutiny in order to make sure that this plays out well. I don't think it's one of those things like in Polymarket where you can even see in the crypto market, like in the crypto wallets, hey, these guys are manipulating. These 4 wallets are dumping millions of dollars inside of it. This is not the same case. So
Hmm.
look, I'm not an expert on CalShi, but I'm more inclined to believe that it might be accurate. But the thing,
Sorry,
I
accurate how? What do you mean by accurate?
that I'm less inclined to believe that millions of dollars are moving these markets. I'm just
Okay.
less inclined to believe it, especially like if you take a look at the polls and the how they actually go about it, their methodology for doing these polls. You dive into some of them, and so many of them are total BS. Total BS. They're purchased in order to give a certain bias towards one thing because it's
Sure.
favorable to whatever, some pack or whatever that's following them on any side. And so I don't believe the polls at all. So given the fact that I don't believe the polls and I don't outright believe these markets, I still favor these markets for the bias than I would do on the polls.
Yeah. So what are your thoughts? I mean, to sort of circle back to this main thesis here, you're saying they're accurate to the actual voting preferences of American citizens that are voting for president, or what? Like, what are your? How do you reconcile the fact that it can be treated like a like a trend following strategy, right? Like these individuals are basically placing their bet on the trend that's moving in their favor, and since they can really either buy yes or buy no on either side, they can chase that trend in either direction. If the divergence gets large enough, we already see that there's reversion to the mean. You can see that over that long term chart initially with Trump and Harris on Polymarket. Wouldn't you expect the same thing to occur on Kalshi here over time, or do you really think that the voting preference is changing in this linear fashion for Trump?
So as someone who's like an Americana weeb, and following everything that goes on inside the politics of the United States, what the first thing I do after I see a big news report or some sort of interview or what have you of the candidates, I go here to see what the number on all these markets to see where the numbers change, and I
Hmm.
am seeing that there is a change that's happening that is representative of the net narrative that I'm seeing. So obviously something happens, and the Democrats say that this was good or bad, and then the Republicans say this is good or bad, and they're always opposite of whatever they're paying attention to. But if someone says that this is a good thing happens, and I'm sitting there going, well, no, this was a bad thing that happens. I'm seeing that the numbers reflect more my opinion, my net opinion on the narrative that's happening.
Hmm.
And so, and then when you're outside of the partisans inside of the, let's say the election, and you're looking at independent media, they also seem to be in line with what's going on the charts. Now, my opinion of this will completely change if the election occurs and it's like a landslide for Kamala. Then I would be like, okay, well, fine. Then this, I'll I won't follow it. But this is the
Well,
first time I'm
yeah.
seeing this type of trades.
What if the outcome of the election though is that the popular vote is very, very close? Like we're talking 49-51 here. And yet even right before the election, the Kalshi market is still 65, 35. What does that tell us about the accuracy of these markets? Does that really show us that these are trend following strategies rather than an accurate reflection of voter preferences?
That's a great point. Kim Carson mentioned something like this, where he goes, where the idea here is that what the markets are measuring are not just the bias, but the magnitude of the outcome. And so the idea is that, let's say Trump were to win, that it would likely mean that the Republican Congress would stay Republican, and then we get the Senate, and there would be a clean sweep, and there would be this massive mandate for the Republicans. Whereas if Kamala won, then let's say it would be a marginal victory. She wouldn't have the House, and then the number of changes that she could implement would be lower. So that the magnitude of the change, if Trump wins, is higher than the magnitude of the change if Kamala is higher. And so what happens is that the idea is that the spread between them is measuring the impetus for people to bet. You have to. I'm trying to find the words to describe it, but it has to be weighted by the magnitude of the actual outcome. So I think that's what we're seeing. That the spread is so much higher than the polls.
So we're not. Yeah, you're saying we're not just seeing a vote for Donald Trump. We're seeing also the impact we believe he'll have on the economy, on the future of America, so on and so forth.
And if you're inclined to then bet yay for him on the platform, well, that bids up the price.
Yeah.
And so it's sort of reflecting that idea.
I'm adding to that argument by saying what also bids up the price, though, is the greater fool theory, the belief that if I buy at this price, it's going to be worth more in the future.
But does it change your opinion that it will be resolved? Like there will be a final price, and whatever it is, it resolves to 0 or 1 at the end of it? Because I would accept what you're saying if it was this ongoing process. But the people who are going in and out for their quick trade, well, they're doing it when before and after a major poll is going to come out, just like an earnings report, and then they're gone. Like they're just trading it, they're gone, and they're not moving the markets that much. And so it's only the people who are there to manipulate the spread long term that I could even say is the people to be concerned about.
How do you manipulate the spread long term? By trading over and over and over again?
Over and over and over again in order to get to bid up the price. So
yeah, there's not much of an arbitrage opportunity within a single day because the variance isn't large enough to really profit from, in theory. I haven't traded these markets, but it seems to me like you would need to place very small bets over a long, protracted period of time in order to truly benefit from them. This spread that's currently taking place has taken more than 3 weeks to start to present itself. At the beginning of October, at least on Polymarket, it was closer to 49.49. Not sure where the difference in math here goes. Like, where does this less than 1% vote go? How can it not be exactly 100% as the sum? I'm not quite sure. Anyway, the spread has increased over the last month. We're now at this point where it's 65-35. In order for me to start making a bet in the opposite direction, I'm basically wanting to measure the distance between the two and look for the extreme. So I would probably start, let me clarify this. If I say buy no on Trump, is that shorting Trump? Do I benefit if his vote comes down? Okay. So then I start building a series of no contracts for Trump, which is my way to short Trump on the way back down to this divergence. On the same side, I can also buy yes on Kamala. That's my theoretical hedging strategy here, if you will, right?
That's right.
You can buy both at the same time. I can say buy no Trump and yes Kamala in order to wait for those two.
And I think you could even sell yeses and sell nos. Like you don't even have to buy the opposite direction, or maybe they just show themselves in the same way.
I'm even more convinced that this is just pairs trading. You're not really voting for a candidate, one candidate or the other. You're playing a divergence strategy. You're waiting for big extremes in divergence, and you're going short one and long the other. Right.
So then, how do you explain over here in the Polymarket chart? Right around the whole is Biden going to get kicked out sort of thing. We had this big spread, and then it's sort of like the volatility around that event did show up in the price, where there was this uncertainty that was being expressed here after the debate between Biden and Trump. So like it is somewhat representative of what's actually going on.
Certainly. Like, think about it again from a trend following perspective. I think the same thing happens in stock markets and even in futures markets, right? If there's any surprising enough of an event or something that's significant enough in order to get people interested in that, in the futures contract, NASDAQ 100 or ES, or, maybe something happens with Tesla. If anybody is under the impression that if they place a bet right now, it's going to be worth more at the end of the day, then that creates that activity, right? So if there's something that happens in the news that operates as a catalyst, that's the beginning of a momentum play.
So do you think the same sort of thing makes it so that, do you think betting on sports is completely devoid from whether or not people actually think this person will win or not?
100%, because most people are basically placing a bet on their favorites for the most part. But I think there's probably more noise in sports betting than something like this. This is kind of like singular outcome, right? Or like a line bet in sports. And more often than not, people tend to vote for their favorite team. What statistical information can you really rely on in order to decide which team is going to win or which one's not? You've got, their game history, like how many games, what's their current record, who are their players, things like that. But there's so many unknown events that are there as well. It's the same thing here. We don't have all the information. There's still a lot of unknown unknowns, like representative data about how people are actually going to vote. There's still 3 or 4 million undecided voters in America as well. So, and those people could literally tip the vote in one direction or the other. What I can definitely say without a doubt is that it's not this big of a spread. I really think, as with most elections in the United States, they tend to be very close. They are never this far apart.
That's right. Okay. And so what do you think about the markets that are not the election markets, where there is no real incentive to shift the price? Do you think those would be more representative, or are they just the same dynamic you're talking about?
No, I think it's the same arbitrage opportunity. Anytime there's illiquidity and an inefficiency in terms of market participants, as long as there's enough volume in that market, people are going to play against the other side. They're looking for exactly the type of trade setup that I was describing.
But they have to do it in the direction of the trend, because
we already said you can be long and short at the same time. So you can create a pairs opportunity.
But we wouldn't expect to see the numbers reversed on Trump and Harris at this point. Or let's go with the Fed interest rate, right? If you take a look at the Fed interest rate on the Polymarket on CalShi, you'll get a number for probability that's not exactly the same as on the Fed probability tool, but in the same ballpark. You wouldn't expect to see it completely opposite on the opposite direction, because it has to be somewhat in direction of the actual trend for the expectation for it to be supported.
I think this goes back to what kind of trade you're trying to express here. If you're trying to play the momentum play, the trend following play, then you'll have to pick one side or the other. And you're really going after the one that keeps going up or the one that keeps going down. In the case of trying to do a pairs trade, you can play both sides, but you want enough of an extreme in order to play both sides.
Fair enough. Okay, well, it should be interesting. Well, there is one more thing I wanted to talk about for the CalShi one, which it's bittersweet for me because CalShi is a US only platform. I can't get access to their API. However, the Polymarket doesn't have an API. CalShi does have an API. Let me share my screen here for a second.
So we're going to go back to the question of whether this gets integrated as another asset class on TradersPost. Excuse me.
Absolutely. So I wanted both as an asset class on TradersPost because they have a nice API here for it, and the use of this as an indicator to be able to use it as part of.
I immediately I would love to know what the internal data on this is. How many algorithmic traders are in this market that are doing arbitrage plays right now? You know what I mean? The fact that they make their API so accessible and they're describing it as algorithmic approach to betting on CalShi just tells me right away that there's a lot of arbitrageurs that are taking advantage of these inefficiencies.
I just can't accept that it's so much that it becomes not useful as a sentiment indicator at the very least. That's the part I can't get to. It can't be that much, because then why would anyone bet in the market?
I think because you're under the impression that you're getting to profit from your opinion, right? Again, I think this is what supports the momentum part of this. If I believe in voting for Trump, and I think I'm going to get paid for the idea of voting for Trump, then I make my bet here. That's what incentivizes people getting involved. It's momentum.
That's a vote in my favor. That means that it's the gray hat thing you're talking about, the black hat thing you're talking about, depends on an undercurrent of an actual belief system that you're voting for what you actually
Just
think.
like the stock market, both of these things are taking place at the same time. Arbitragers exist in the stock market as well as long-term individual investors, as well as short-term traders. All of the market participants operate together. And since we don't quite know exactly where price is going to go, what people's incentives are based on is what we know about price today and where it recently was, right? So if we know the trend is currently heading in this direction, all that does is create a feedback loop for more and more people to jump in on the Trump vote, to go long Trump and short Kamala. Eventually, that's going to reach an extreme that makes no sense. And so people start going the other direction.
Okay, last thing I'll say on it. Let's say instead, you're not looking at any one given market, but you're looking at so there have been a series of, let's say, Trump-Harris bets that you could take over the last few months. And then there's that, and then there's different kinds of markets, right? For the battleground states and for quirky things like will JD Vance wear a blue suit at the debate versus a gray suit at the debate, like all these different things.
Are they really making them that small, like little tiny things like that?
I'm telling you, man. I'm telling. It's all kinds of different things that happen in these markets, not just a country, but like predicted and all that. All these crazy things. How many times will a certain word happen inside of an event or whatever? All these different things. And so, if you were to take all that into consideration, you were to develop something, a strategy that took all that as a sentiment analysis into consideration, would you say, well, that might be representative of a trend you can actually make a decision on? Or is the guy behind the curtain?
I'm still like, I guess I'm going to have to die on this hill. I'm very convinced that these markets are very inefficient and they're largely run by arbitragers, and that ultimately people's betting preferences are based on momentum. I'm going to stand by that thesis. And the way to prove that thesis is to watch for the extremes. Watch when it gets too far spread and watch it bounce back and revert to mean. Show me an indication of it running so far spread out over a period of time, all the way to the very end. And I'd be interested in analyzing that a little differently. But I think we've got some comments here that are really cracking me up here on the side. But we've got sort of, we have to consider that the incentives of market participants vary from betting pool to betting pool, right? If the pool is small enough, it's probably less of an incentive for mommy, daddy, stop fighting. It's less of an incentive for arbitragers to get involved because there's not enough liquidity there. But if the pool is large enough and the divergence is large enough, I'm more than certain there's somebody playing on that inefficiency.
Okay, so you don't believe the stock market tells the truth either?
It's different. It's different, right? Like there's other rational information that's behind the scenes that supports the market price. There's always this difference between market price and the actual value of a company. We can take the value to represent a proxy for where that price should go over the long run. And oftentimes, and many times, the value of a company can be completely divorced from the actual market price. In this case, though, we don't have that inside information. We don't have earnings reports to go on. We don't have any, public information about how many people are voting for Kamala versus Trump. So there's no reliable inside information that should tell us whether or not this is an accurate reflection of reality. What I can say is that, my sense of markets tells me that people play on momentum and people play on reversion. And those two things exist in any type of trading market, especially if it's constructed this way, where you can go long and short on either side and you can bet in either direction. They've been given the instruments in order to make those types of bets. So it would be different if this were like we had a verifiable way to cast a poll for 100 million randomly selected Americans, and they all verified their identity, and we asked them, who are you going to vote for? And then we ended up with the results of that, right? Like taking a small sample of 12,000 people across the United States, I totally understand why people lack faith in polling systems, because usually the samples are so small. But eventually, if you get a lot of opinions together, it's really hard to argue with the stats at that point. The only time we have this decisive information about how voters actually think is on election day.
That's
and
right. I just want to say
next week.
What you describe it is just, Tom, just have an election and then
just
you'll
have
know
an
what the thing
election
is.
and then we'll know.
Fine. I'm going to go on Glassdoor. I'm going to find a disgruntled worker at Polymarket and at CalShi. We're going to get them on the show and ask them what's actually happening behind the doors, because I think you're
I'd
wrong.
love it.
Let's see.
I would love to go toe to toe with the CEO of CalShi there. I really think that he's got a lot of good reasons to ignore the impact that arbitrageurs have on their markets.
Excellent. Perfect. We should still do TradersPost bets, and it's a standalone product that integrates directly with the markets and make lots and lots of money.